Boom, we are alive, ladies and gentlemen. It is never a dull moment in the crypto sector. It's always something exciting going on. It is almost like a crypto theater. That's what we'll call it. Crypto theater today. Elon just made a pretty ridiculous post. I'm pretty sure he's shit posting. Either that or he's just completely uninformed about how certain things work, which actually makes sense considering how smart he is. He's gotten a few things wrong, I've heard in his conversations along the way, where you definitely know that as well as he's studied, he's missed a few classes. Anyways, we're going to start off by going over this kind of fun tweet he just made, and we're going to make some conjecture around it. We're just going to hang out throughout this kind of fun little bit that we got going on here. So for those of you that don't know, Mr. Musk just made this tweet. He said, Tesla and Bitcoin, I'll read this out here. We'll go through it. It says, Tesla has suspended vehicle purchases using Bitcoin. We are concerned about rapidly increasing uses of fossil fuels for Bitcoin mining and transactions, especially coal, which has the worst emissions of any fuel. Cryptocurrency is a good idea on many levels, and we believe it has a promising future, but this cannot come at a great cost to the environment. Tesla will not be selling any Bitcoin, and we intend to use it for transactions as soon as mining transitions to more sustainable energy. We're also looking at other cryptocurrencies that use 1% of Bitcoin to energy transactions. And I there so nicely wrote back, well, where does Tesla get its energy to recharge its cars from? Or how about mine the lithium? Or what about all that rocket fuel you can burn to send shit into space? So I'm assuming you're going to stop making cars and flying rockets then. Isn't that correct, Musk? You know, the lithium industry itself, where Tesla gets its batteries, its cobalt, is extremely destructive on the environment. First off, just from that alone, there are many good arguments that Tesla or Elon should probably stop making cars in the first place. So I'm assuming that he's probably joking here and just saying a bunch of dumb shit. There's another great PDF as well. For those of you that do not know, Arcane Invest is one of my favorite. Kathy Wood is absolutely amazing. And she has this wonderful white paper by, what was her name? You have to go sign up. But it compares the Bitcoin mining industry. You have to sign up for her. I don't have the PDF downloaded right now, obviously, do I? No, but this is a great PDF that they created, and they go over the actual mining in comparison with like traditional banking systems, etc., and how effective Bitcoin is in comparison. And ultimately, I think that Musk has completely missed this, and he's missed the mark a few times, right? Just because you're smart in one area doesn't mean you have the competence in another. So I do like the fact, though, that he's at least interested in the conservation of our environment. But when you're mining lithium and cobalt to make cars, you're just full of fucking shit. Like, shut the fuck up, dude. You're full of shit. Anyways, that's a complete side note. We'll dive in. We'll look at how the market's reacted so far. Ethereum got a nice jump there. I'm assuming a lot of this reaction into Ethereum is coming from people being like, oh, but Ethereum is proof of stake. It's not yet. It still uses mining. And Bitcoin took the reaction pretty hard. Now, we were looking at this moment yesterday, and we've seen this small distribution. Now, you know, this area here, we were looking for a test of this area last night. I said that. I was like, look, we're looking for a test around the $51,000 area. Hey, we got it. Lo and behold, it happened. Now, let's kind of take a few minutes to go over the supply signatures here. We see a lot of sell pressure coming in. And, you know, when we're going over this stuff, I've talked about this many times and we'll continue to talk about it because I'm always learning. I don't know. Can be wrong, of course, right? These supply signatures, these sell sides are really big, right? So even though we're getting a lot of sell volume in here, the price spread is actually not all that high. Now, even though we got this kind of tweet and we're talking about, what is this? We're talking about hundreds of thousands of people. At least 125,000 people have liked. I liked it just because I like everything Elon does, even if it's stupid. I do stupid shit all the time. I also like the stupid shit that I do. It's part of being a human, I figure. Although maybe we could make an argument that either him or I are not human, but that's at least the body looks that way. On this side note, though, you know, when you get this kind of conjecture on the internet, when we were looking for this secondary test anyways, so when you get the spring, which is what I think this is, you usually get a test of that spring area. And we've been following what I believe to be a rising gradient bottom. So this to me kind of makes sense, right? We had talked about this in our previous videos that we were looking for a test probably around the $52,000 to $51,000 area where the red line is, the bottom of this red line. And this is actually quite normal. So just for fun, we'll go through the whole process. We're like, well, here's our primary support. We'll mark that off as PS. And then here is our buying climax. So bam, like that. Here was our first shakeout of this trading range so far. We'll mark that shakeout just so we know what we're going through here. We saw a really strong automatic rally right to the top of this rising, what I believe again to be a rising gradient bottom. I could be incorrect here. We saw a test and then a nice up thrust. So we'll just go secondary test basically. And here's our up thrust UT. And again, there was some concern about this from people around this being a distributional moment, and hey, heck, maybe it is. I do not believe that's the case, though. I believe what we witnessed here was the spring. Large amount of sale pressure came in, and very little buy power. You know, bull markets are usually, again, the finality of the bull market here is usually an enormous amount of supply coming into the market on the upstroke, effectively, right? So generally, it's the first part of this up thrust that would be the warning sign, where we would see a lot of supply signature moving to the upside and not the downside. So we're keeping a close eye on that. And then I believe this was the spring. A large amount of supply came in, tested the bottom of the trading range. And now I believe we're getting our test before we go through and do the LPS phase. So we were looking for this test and we got it. Here it is. That's what it looks like. Great. Now, again, a big part of the question here is, you know, is he right? Is he actually making sense? Because he doesn't know, you know, is this a plausible idea, or is he just strictly shit posting? He may be just shit posting, as far as we know. This might just be total garbage. He's allowed to do whatever he wants. And if you've read ARK's Bitcoin mining white paper, Cathie Wood is apparently significantly more intelligent than Musk, at least in my opinion, from the financial side of things. She's better at spotting, like, although I'm not knocking Musk, he's obviously a gangster. Like, the guy, I love him. His SNL monologue was amazing. I really think he's a fun character in this sector. But I think he's really missed the ball with understanding Bitcoin's mining and its effects on energy and climate in compared with, you know, the traditional banking system, or even him mining lithium and cobalt for his goddamn fucking cars and his fucking rockets. Like, guy, you're so full of shit. Anyways, that could be my personal opinion. I don't have a schwackload of scientists and analysts helping me figure this stuff up. I'm just kind of making stuff up, right? So maybe I'm wrong. But again, I really think he's missed the ball here with this particular tweet that he's made. And if we go through and we look at some of the comments here, you've got your standard characters. Hey, look, there's the Arcane Bear. I like this. Doge replaces BTC. Again, I've said since August, do not underestimate the randomness of the choice of the people. And Doge can be one of those choices. Here, Elon jumping in. You realize that 75% of the miners run on renewable energy, and this is true. Again, I really don't think Musk has done his research here. I think he's reading The Independent, which is just horrible to think that he's been fed mainstream media. So the store of energy has been debunked over and over again. And again, if you read Ark Invest white paper, Ark Invest white paper PDF mining. Let's see if we can just pull it up here. They're going to make me download it, aren't they? They're going to make me download it. I don't have it here. Let's see. Maybe what we'll do is we'll quickly dive in, and I'll try to download that PDF just so we can open it. It's a great PDF. If you haven't read it yet. Oh yes, what are they? Yes, there we go. Thank you. We skipped it. Okay, so Bitcoin mining, the evolution of the multi-billion-dollar industry by Ark Invest. Is proof of work inefficient? Is the cost of a reverse transaction? Evolution of mining is an operation. The cost to mine and the geography of mining. So 13 and 14. Let's just jump to these pages here. And then this is a good one too. So proof of work, is it inefficient? Proof of work, critics often assert that the process consumes significantly more resources than it creates. However, advocates consider not only the intended trade-off, but the fundamental features. It is highlighted by founder BitGold and pioneer Nick Szabo. The prolific resource consumption and poor computational scalability unlock a security necessary for independent, seamlessly global, and automated integrity. So ARK believes that Bitcoin has a unique ability to provide powerful settlement assurance and trust minimized in a manner because specialized dedicated hardware to perform the function proves the computer has executed a costly computation. So that's what proof of mining is. And then let's go down here to page 13. So here's the estimated miner cost per hardware going up in 2019, the role of hardware, miner difficulty, where's pages 13 and 14. There's 9, 10, 11, 12, 13. The operations of mining. Okay, this is a good one. Let's see how we're doing here. Yep, everything looks great so far. So keep going over this. I think this is kind of fun to go over, seeing as it's part of the conversation. So let's make sure I get sizing the here we go. The operations of mining. So the evolution of mining as an operation, as the industry is professionalized, mining operations have changed substantially. Mining data centers now, industrial scale facilities, and management servicing on par with traditional data cloud centers. Contracts are often long-term and built from multiple hardware cycles, requiring significant upfront capital, spending power supplies ranging in the hundreds of megawatts. Electricity is, of course, a critical consideration in the economics of mining facilities, and with low-cost stranded renewables particularly attractive, miners have also begun to leverage vented and flared natural gas at upstream and oil gas facilities. Additionally, governments are offering electricity subsidies to attract miners who will set up operations and steer their countries towards the leading edge of innovation. So manufacturers and self-mining, we'll just go to the cost to mine. The cost to mine, profitability levels for miners vary across operations. Given their high competitive nature, large-scale Bitcoin miners tend to operate privately. Their capital spending is largely a function of hardware, and their operating expense is a function of electricity, cooling, and maintenance. According to a research based on Bitcoin's historical hash rate, the advances of mining hardware since 2013, miners have spent $17.6 billion to deploy, operate, and support their expansion, as in this graph shown below. To illustrate the cost to mine a Bitcoin, to assume the miners purchased hardware hashing rate around 16 terahashes for around $750. When in service, the hardware consumes 1 kilowatt of energy or electricity costing around 5 cents per kilowatt and incurs maintenance, leasing, cooling costs of around 3 cents per kilowatt an hour. In total, running the hardware for a year would cost around $700. At current Bitcoin difficulty, the miners are expected to generate approximately 0.1 Bitcoin annually. An extrapolation of the cost of the mine the full Bitcoin, assuming that 12.5 Bitcoins of a block reward, comes to around $7,000 per Bitcoin plus the cost of hardware at 3 cents per kilowatt of the electricity cost to mine the Bitcoin at a roughly $5,000. Now, this is a little bit old. It's actually more expensive than that when we've gone over this in our stock to flow models. But this is where I think Musk has got this conversation wrong. And I think he should probably, or his team should probably read this as well. Let's just take a look there. Bitcoin's still holding up nicely at our test range. So the geography of mining. A number of factors can influence hardware and electricity costs. Historically, most large mining farms have set up their operations in China for a number of reasons, some of which have diminished in importance. Among them are the following: to leverage local infrastructure and scale rapidly. Given 1 to 6 month hardware replacement cycles, the early days of mining, farms had to hit the ground running to generate positive returns on investment in a business that might be profitable for just a few weeks or months at a time. Based on shorter deployment times, shipping, and overhead costs, China was a logical location because Asian foundries supply most of the chips for hardware mining. Now, to design cycles and lengthening, however, we believe that competitive dynamics are shifting from geographical proximity and rapidly deployment products in reliability and energy costs. To take advantage of cheap electricity in sweetheart deals with municipalities. Again, historically, Chinese miners cut deals with large power plant owners and local municipalities to access cheap energy. Mining farms proliferated to the Sichuan province, for example, attracted by the access to cheap electricity from its hydroelectric power stations. Elon, fuck you. Can't read, can you? With a surplus in hydro power capacity, again, I love Elon Musk, by the way. I'm just, who the hell am I to give that guy a hard time? Sichuan wanted to capitalize on what would otherwise have been a stranded asset. Now, the Chinese government has turned hostile toward crypto assets and ramped up pressures on miners. The political risk is rendering mining almost untenable, and local governments are also hurting the economics with new taxes as well as regulations in the price of electricity and the use of land. As China has forced them out, mining operations and diversifying geographically with the cost of electricity as a primary consideration. Many countries offer competitive electricity rates, including that of Iceland, Canada, and the United States. Chinese mining machine manufacturers also are beginning to hedge against an intensified crackdown by the Chinese government. As Canon states in its IPO filing, an increasing proportion of its revenues have been derived from sales to customers outside of the People's Republic of China. Changes in policies and laws regarding holding, using, or mining Bitcoins could result in adverse effects in its business operations. So the state of mining pools today. Mining pools were introduced in late 2010 in response to an increased proof of work difficulty, inhibiting individual miners from consistently mining blocks. A traditional CPU miner today would need centuries to mine a block. By pooling resources and sharing processing power in mining pools, small-scale operations can survive on more predictable and timely payouts. Bitcoin critics often cite mining centralization as a notable risk to the security of the network, but because individuals no longer can mine profitably, hash rate does seem to have consolidated into a handful of mining pool operators. Though many critics again conflate entities running mining pools with entities that own and operate their own mining equipment. While Bitmain owns and operates a small percentage of global hash rate, it also manages 2 mining pools with mining equipment owned and operated by third parties. Miners are free to come and go as they please, and fearing centralization, they can switch to different pools. It has historically been the case. So as we'll show here in the figure 9 down below, the current hash rate and distribution among mining pools is somewhat concentrated. The top 4 mining pools account for more than 51% of Bitcoin's hash rate. Let's just make this bigger so you guys can hopefully see it as well. So notably, Bitmain does not operate both Antpool and BTC.com, but also owns a stake, not only operates both Antpool and BTC.com, but also owns a stake in via BTC. So here's your hash rate distribution by mining pools. Again, the majority of it here sitting in F2, Poolin, Antpool, and BTC.com, followed by OKX, Huobi, 1T hash, and Bytepool, and so on, all the way down to Bitcoin.com at the slimmest. So if we assess the level of mining pool centralization, before I do that, we'll just continue on here. Still feeling a little bit of the effects of the downward pressure into our test range here for Bitcoin. A common heuristic for determining market concentration. The U.S. Department of Justice considers a market with an HHI of less than 1,500 to be a competitive marketplace, and an HHI of 1,500 to 2,500 to be moderately concentrated, and an HHI of 2,500 to be greatly or highly concentrated marketplace. So according to these 3 versions of HHI, the mining industry is surprisingly competitive. And the first version is unknown, a single entity, as shown in figure 10. HHI mining pools have improved over time, with the only instance of concentration most notably in 2013. Since then, HHI has declined on average, and every year this stands out around currently 13. So we'll skip down here a few more. Where was the next one? Do we want to go to mining turnover? Let's go to the miner influence. No, our miners' whales, accumulative variable costs, miners' attack vectors. Where is it? Selfish mining. No, we just want to find the next part here, which is the future and the costs. It was this next page, I believe. It was easier to see the. Okay, here we go. This last page here. So the future of Bitcoin mining. In our view, Bitcoin mining will become increasingly competitive. While new entrants are competing against miners and manufacturing incumbents, existing players are struggling with the commoditization of hardware and the collapse of profits and margin. Now, again, this is produced at the beginning of December 2018, so it's of 2019, so it's a little outdated in terms of the profit price relationship right now, which is significantly higher. But again, it'll become harder to obtain large amounts in any specific region. Experience arbitrage opportunities that will continue to be met with fierce competition. And at most stages, hardware, supply chain, commoditization, and competitives are lowering the risk of monopolies. While considered a risky, volatile, but highly profitable business today, we believe that mining should evolve to resemble traditional commodities. ASIC life cycles will be long enough to industrial miners will have far greater predictability in their cash flows. And in a mature derivatives market, miners will also be able to hedge against Bitcoin's volatility risk, ensuring sufficient cash flows to fund ongoing operations. And we've talked about some of this stuff in the past. we'll go over this part here. While many power plants tend to only run during times of peak energy demand, Bitcoin mining provides incentives to operate year-round. Ultimately, deeper capital markets, longer hardware cycles lower that expected threshold and thresholds to profitability, dampened by price volatility, should provide significant opportunities to unlock precedented demand to mine Bitcoin. Again, in its entirety, we estimate the cumulative spending for around $17 billion, just 10% of the wealth it secures of around, which is significantly more now, like almost $1 trillion, of which the energy burned to secure Bitcoin as annually is a fraction. Viewed under this lens, the mining industry has become hyper efficient in the relative amount of resources it expends as a function of the wealth it has secured to date. We expect that Bitcoin's network to continue to appreciate at a faster rate than a cumulative mining spending, yielding an even greater efficiencies than today. In times of geopolitical uncertainty, financial market volatility, converting electricity into a monetary asset could take on new importance, and we believe that Bitcoin is a call option on a global digital monetary system and a hedge against existing regimes, potentially undermining the dollar as the world's reserve currency. Bitcoin could ultimately be the path to direct exposure to the new world monetary order. This is a great PDF. I think that they actually have a second one as well. We'll have to go back again, but what we went over this here. Most of this runs on hydroelectricity. I think around 75% of all Bitcoin mining runs on hydroelectric dams. And governments are currently incentivizing them to use that so that when there are no peak out, like when everybody else is asleep, it switches over and they offer a cheaper price on that electricity that's just being generated and doesn't go anywhere. You know, these hydroelectric dams are constantly producing energy, but if no one's using it, they don't have anywhere to store it because, again, batteries and lithium take an extraordinary amount of energy, to mine it all. I really think Elon Musk here just kind of missed the ball on this one. And I agree with Pompliano that we've debunked this over and over again. So ARK Invest on Bitcoin mining, if you guys would like to read the rest of that PDF that we went over. Again, I believe that, and here, this is an interesting one. Kathy Wood's ARK says Bitcoin could help fight climate change. Pushing back against the climate activists concerned about Bitcoin's carbon footprint, the head of research, Kathy Wood's ARK, and I love Kathy Wood personally. She's like, if I want financial ideas, I don't listen to anybody else. I literally listen to nobody else but Kathy Wood, and I definitely wouldn't listen to Elon Musk on this one either. So is arguing the world's largest cryptocurrency, far from being a danger to the planet, will actually help generate more electricity from renewable energy. Bitcoin's critics often assert that Bitcoin mining consumes more resources, specifically energy, than the benefit it creates. Brett Witten, ARK Investors, a director of research, wrote in a blog post Monday. We'll open this one too. Just go over as much data as we can here from this particular conversation. Okay. Critics also assert that the computation required to secure Bitcoin, even if necessary, is environmentally damaging and ruining the planet. We believe that the opposite is true. During Bitcoin production, a global decentralized network of computers races to verify blocks of transactions, with the winner receiving the new Bitcoin. Bitcoin's prices skyrocket. Again, this is in January. Let's skip that part. So in China, which accounts for currently around 60% of the Bitcoin mining, according to Cambridge Bitcoin Electricity Consumption Index, authorities have taken steps to rein in Bitcoin mining to limit greenhouse gases and emissions from coal-fired power plants. So he's got a point. We are all around the world, people are using coal-fired power plants. And the problem is, Elon, those don't turn off. And when people are sleeping, that energy isn't going anywhere. Why not use it? So a recent report from the Bank of America found that energy used by the setup of computation was par with some developed countries. And this is where this kind of conversation is coming from. But Winston argues that Bitcoin mining will actually help boost the overall share of planet-friendly energy and encourage investment in solar systems if mining were integrated into more renewable energy systems. According to ARK investment models, without Bitcoin mining, solar energy could supply around 40% of the grid power before utilities have to fund major investments with higher electricity prices. But with Bitcoin mining integrated into solar systems, solar plus batteries, we believe energy providers, whether utilities or independent entities, could play arbitrage between electricity prices and Bitcoin prices, as well as the surplus of supply from solar at almost all grid power demands, lowering profitability. Again, I think he's missed the point here that a lot of these like hydroelectric, solar dams, when you don't have peak hours. For instance, in Costa Rica here, we run almost entirely off solar and hydroelectric, and at night, nobody uses it, and that power just gets burned off. It doesn't go anywhere. So why not set up something that's actually becoming more profitable and integrate into countries like Costa Rica? It just makes sense. So ARK Invest model further asserts that Bitcoin mining solar batteries could satisfy 99% of what the grid needs. The model's conclusions are based on the thesis that solar energy will not be used to mine Bitcoin unless the demand of the grid is met first. From the premise of the model examines whether it's more profitable to store energy in the battery or to mine Bitcoin. And this is a hugely complex argument that they're making here. The Bitcoin miner allows the developer to be more efficient over the power system of solar, allowing the miner to soak up excess energy generated and the power down to accommodate the periods of increased demand or patchier sun. Such innovation could create opportunities at the residential level even, especially if the heat waste from Bitcoin mining can be used in other ways. And as battery supply remains tight due to demands from electric cars, Bitcoin mining for battery systems could produce opportunities in that arena as well. Another plus side, mining attached to solar systems would generate revenue as soon as it was internally wired, as opposed to today's systems, which can take months to get interconnected, cleared to sell to the grid. I think that they've made a great here. Here you can, Brett Winston, if you want to read his Bitcoin battery mining. Again, let's open this one up. We'll just kind of go through here. Let's take a look and see how the price is reacting. Good. We're still getting that push down. Nice. The market's the market's getting some. Again, we're looking for that test of that $49,000 to $51,000 area. We talked about this for a while. It's always nice to have a test. That's what we're getting now, I believe. We'll go back to this. We believe that the opposite is true, that a world with Bitcoin is a world that at equilibrium generates more electricity from renewable, carbon-free resources. So in this piece, we hypothesize and illustrate how Bitcoin mining will increase the overall share of renewable energy provision to the grid, potentially further skewing both global and Bitcoin mining energy mix towards renewables. With real-world data, we seek to demonstrate that Bitcoin mining could encourage investments in solar systems, enabling renewables to generate higher percentage of grid power with no change in the cost of electricity. With Bitcoin mining, according to our model, solar and an intermittent, which is key, an intermittent energy source could supply 40% of the grid power before utilities would face the need to fund significant investments and then therefore create higher electricity prices for the average person. With Bitcoin mining integrated into the solar systems plus batteries, we believe that the energy providers where utilities independent could play arbitrage between these prices. So here's the graph below. The size of each circle is proportional to the size of the Bitcoin mining operation. At each point, the solar system provides a different percentage of the grid's needs. As Bitcoin mining scales, the solar systems increase in size to provide a higher percentage of the grid's needs as well. Increasing Bitcoin mining capacity allows the energy provider to overbuild solar without wasting energy. In the bottom left of the chart is the absence of Bitcoin mining. Renewables can satisfy only 40% of the grid's need. In the top right, including Bitcoin mining, batteries can satisfy 99% of the grid's need and demand. This is a hugely complex argument that they're making here again. And I think that they are right, and Elon's kind of missed the ball in this one. So our model seeks to demonstrate that integrated Bitcoin mining can again transfigure intermittent power sources into base load capable generation stations. It is the suggestion that the addition of Bitcoin mining into power developers' toolboxes should increase the overall addressable market for renewable and intermittent power sources. All else equal, with Bitcoin mining, we believe that renewable energy should be a provision to a large percentage of the locality's power, economically speaking. So what they're saying is that because of the intermittent function and the lack of ability to store energy and hydroelectricity, if you were to outfit a lot of these systems with Bitcoin mining, they have a capitalist incentive to function more efficiently and often be able to produce more of their energy without having that excess that just goes to waste. I really think that he missed the mark on this one. And although there are better systems like Avalanche and even Ethereum, once it goes to proof of stake, that this is a much better argument for how we actually would grow out and include more solar systems, because they can remain profitable even if there aren't enough people using it in those peak moments. And anyways, I really like this. So anyways, we'll jump out of here. We'll watch the price for a second. Where are we at right now? We're at $4,050 for Ethereum, jumping up and down. There's a lot of volatility in the market right now. Clearly, Bitcoin's down at $52,000 at the moment. Yeah, that was a nice 10% drop. But again, we were looking for this yesterday. If you look at yesterday's video, we had a nice pump in the altcoins. Usually when Bitcoin's somewhat stable, we get that. And we're looking for the test. That's what we usually want, spring and then test. So for those of you that are new to the space, let's just quickly go over what we like to study, reaccumulation patterns. Okay, so Wyckoff, the methods are one of the things we like to keep an eye on. So the reaccumulation or accumulation methods are extraordinarily powerful, and it's usually after this type of spring area we get a test. So that's kind of what we're looking at right now is a test in the LPS scenario. I feel very confident about that so far. If we start to break and significantly close below 51,000, I'll say that I was wrong for a minute for sure. But for now, this looks just like we had hoped. We're getting a nice test in this region, so everything looks positive for now. And Musk just saying crazy things. Again, so for those, I like this one too. This was a good one. Solana said, "Hey, you can DM us. we're more efficient." I really like Solana as well. By the way, guys, in case you didn't know, again, what we're kind of going over today is just Elon Musk making what I consider to be a silly tweet. Especially a guy who launches rockets and mines a shit ton of cobalt and lithium, saying that Bitcoin is inefficient and bad for the economy. What are you talking about? Shut up! You have no such bullshit. Oh God, some people. Just getting a nice chunk in the downside. Anyways, we'll leave it at that. We'll be back on live. We'll double check on Bitcoin's price this evening. We'll probably get a nice quick rebound. Again, we're going to want to watch the trading ranges here. This test looks good so far. Again, most of this selling, the fact that we're able to go up easier than we are to go down, considering how much selling has taken place here. I do not believe this is a distribution pattern still. Again, that could change again if we start to see some serious closes below the trading range. And as I mentioned already, I took profits at around $58,000 in Bitcoin just to cover my next few years of operational costs, and I'm just letting the rest ride. I'm not trying to like close out of a position to like buy back here. It's just not worth it for me. All of our positions we started way the frick back here in our early trading ranges. And for those of you that are new to the markets, you know, more than getting out and like saving profits, what you want to do is get really good at recognizing these early stage accumulation patterns way before we're up here and the risk is significantly higher to be in the market at all. Like right now, I'm not sweating because I have so much room. Like it could drop all the way down to $35,000. I wouldn't care at all. I'd be like, great, cool, cheaper Bitcoin. So keep that in mind. When we come back tonight, we'll go over Serum, we'll go over Avalanche, we'll go over MStable, we'll go over Ethereum as well. For now, I just wanted to kind of make some conjecture and jump over that. So thank you guys all for joining us. Remember, if you are new to the channel, please follow us on any of the social media links down below. This is Tio with the Arcane Bear. I hope you guys are having a great day. It's already getting dark here. Look at this shadow eye I have going on right now. Thank you guys. We'll see you guys on the next episode. Oh, wait, hold on. Check this out.